Welcome to Trade Pro. In this video, I'm covering one of the most common questions that I get asked, and that's how do I stop getting caught on large pullbacks and reversals, as it feels like every time I enter into a trend, that's where the trend stops moving, reverses, or goes into a larger pullback, ultimately stopping me out. So essentially what they're asking is, how do you know if the trend still has plenty of steam left in it and momentum left to go for a nice sized continuation move that you can capitalize on? And so that's what I'm going to be discussing in this video. This is going to be kind of more of a freestyle video, so bear with me if I'm slow or having trouble getting to the point. I'm going to make sure it's very clear. I'm going to go through a bunch of examples, talk about the best way to gauge whether the trend has enough strength left in it to go for a nice continuation move that you can capitalize on. And this is going to be similar to last week's video, which had really positive feedback, called the relationship between market structure and indicators, most important trading lesson video. People wanted to see more videos like this, so this is going to be another kind of similar video, but answering a different question. So go watch that video if you haven't seen it yet. But anyway, without further ado, let's get into this question and talk about this. So the indicator you will need to accurately anticipate larger pullbacks and or reversals is the MACD with standard settings used in a specific way, which I will cover in a bunch of examples. You will also need something to gauge the trend direction so you can know which direction you're actually trading in. So let's just go through a bunch of examples here, and I'll talk about exactly what I'm looking for to kind of gauge when the trend has lost its momentum, lost its steam, looking for a larger pullback or potentially a reversal. And I do want to be clear that this is not for trading a reversal. This is still trading with the trend and just kind of knowing when to step aside, when to expect a larger pullback or maybe a reversal. But this is not for catching bottoms or catching tops. I'm still trading with the main trend, still looking for momentum continuation moves. Okay. So let's just go over this first example, and then I'll just get through a bunch of examples so it really makes sense and is very clear to everyone. So here's how you can use the MACD and histogram to your advantage and know when to stay out of trades where it's a much likelier chance that there's going to be a larger pullback or trend reversal. So let's take a look at this downtrend where the super trend is red. So that's our trend indicator telling us to look for pullbacks in order to short and join the downtrend, expecting continuation moves to the downside. Okay, so let's use the histogram as our indicator to tell us when it's okay to look for a short trade. So any cross up here where we have a green histogram, this is going to be the time when we can look for the short trading opportunities, and also our super trend is red at the same time, of course. Okay, so super trend is red. We have our green histogram on the MACD. Those are our opportunities to look for continuation moves and look for entries for short trades. Now, which one of these can we actually not utilize? Which one of these is a no-go zone telling us that the trend is likely looking for a larger pullback or reversal? Well, not this one. This one is completely fine. We have our push to the downside and our downtrend begins. This is our first cross to the back to the upside, and our signal and MACD lines cross to the upside for the first time. Okay, so in this area, great shorting opportunity, no problem here. Plenty of steam and momentum left in the tank. Now, this next time, what do we see? MACD and signal lines make another lower low, okay? So compared to back here, price makes a lower low down in this area. MACD and signal lines also make a lower low, meaning we can still utilize this next pullback as a shorting opportunity with plenty of momentum and steam left in this trend. So this is all fine, looking for shorting opportunities on this next pullback. Then now this one people may get a little bit confused about. This is another valid opportunity right in here to look for a shorting opportunity. We have our super trend red and green on the histogram here in this downtrend. A lot of people may say, wait, but we just got the first divergence where the MACD and signal lines make a higher low. But at the same time that these MACD and signal lines make a higher low compared to back here, price is not making a lower low. So it's not a bullish divergence yet. What we need to see to tell us to avoid the trade is price makes a lower low, but at the same time, MACD and signal lines make a higher low compared to the previous lower point in the last pullback. Okay, so here's our lowest point on the MACD and signal lines over here. We get the lower low on the price action, and at the same time, a much higher low on our MACD and signal lines when they cross back to the upside. So this histogram right here, this green histogram with price still under the super trend still red, we don't want to be looking to short right here on this pullback because of what had happened here with this higher low. At the same time, price made a lower low. Okay, so that's our bullish divergence right here on the MACD and signal lines versus what the price action was doing that. And of course, that leads into a much larger pullback in the trend. Now, a long trading opportunity. We see an uptrend with our super trend in the green, and we're wondering if this first pullback in the trend is actually going to have enough steam to go for a nice continuation move. So if we're utilizing our histogram in the same way as the last example, when in a bullish trend, we'll be looking for the histogram to go into the red to look for a buying opportunity. And that would be all throughout this range right here on this consolidation. This is completely valid. This one is good for looking for a continuation move to the upside, as this is our first cross down on the MACD in this uptrend. There's still no bearish divergence on the MACD and signal lines. So definitely good to look for another continuation to the upside right in here, and just expecting that momentum to continue to the upside. Now let's look at our next opportunity where our histogram goes into the red for the potential for a buying opportunity. This time we don't have a valid setup because the MACD and signal lines have created a much lower high at the same time that price makes a higher high. So this one we're going to be avoiding, as it tells us in this area that the momentum has slowed down, we're running out of steam, and we can expect either a larger correction or the potential for a reversal coming up. So now let's look at some more examples. Here's another opportunity to enter into some short trades with our super trade in the red. And remember, we're looking for times when the histogram is green while our super trend is red to potentially enter into short positions. And we have to ask ourselves, is this valid? We just started our downtrend right here. This is our first cross up on the MACD and signal lines and first green on our histogram in this downtrend. So this is completely valid. This whole area is a great opportunity to enter into a short trade expecting continuation to the downside. So that's fine. Now we just wait for our next opportunity right here, which corresponds to this area in the downtrend, looking for a short trade in this area. Are we still valid? Do we have any bullish divergence on our MACD and signal lines yet? Well, the answer is no. This is still a great opportunity. There's no bullish divergence yet. The MACD and signal lines have not created a higher low at the same time as price making a lower low. So great shorting opportunity in this area here. And we'll just be waiting for the next time that the histogram goes into the green, which happens right over in this area, which corresponds to this pullback here. And now this time is where we need to be cautious, because look what happened. We got the much higher low on our MACD and signal lines, but at the same time, the price makes a much lower low. So that is a valid bullish divergence on our MACD and signal lines, which tells us that price may be going into a larger pullback or potentially a trend reversal. Now, yes, there is some more movement to the downside, but this gives us that clue that we may want to stop shorting this, as we already had a couple great opportunities in this downtrend, and the momentum is starting to fizzle out. As you can see, price does start getting more choppy and then go into a larger pullback on this one. So let's just hop right into this next one right here and talk about the opportunities here. So we have a green super trend telling us to buy, and we look for our first pullback here where we get the red histogram, which tells us it's time to look for a buying opportunity. So you can be buying anywhere down here. And this is valid. This is our first time that this goes into the red on the histogram, with the super trend being green. So valid opportunity to buy here. Then we can look at the next time that this goes into the red. Is this a valid opportunity throughout this pullback right here? The answer is yes. We still have enough momentum and steam left in the trend. The bearish divergence is not present on the MACD and signal lines, so this is still valid. They make a higher high at the same time price makes a higher high and higher low, so another valid buying opportunity here. And then we take a look this next time that this goes into the red, and we are still valid here. So this is still valid buying opportunity on this pullback here in the red histogram. And then we see this fizzle out. So we do get a push up for a higher high on the price, but then this does fade out. So this is something that you will see. And what we could do is actually look at the 30-minute time frame or the 15-minute time frame, where you're more likely going to have this actually cross up and create that bearish divergence on the MACD and signal line. So it's not perfect if you're sticking on just one time frame. Sometimes you'll get the setup more clearly on, say, the 30-minute time frame or the 15-minute time frame. But here you can see it does almost cross up there and create that regular bearish divergence compared to this pullback. So it's almost that perfect setup like in those other examples, but I'm sure it happened on a 30-minute time frame or a 15-minute time frame. Just didn't quite get there on this one, but you got a few opportunities to have good trading opportunities to get in for higher lows and higher highs. This one just kind of fades out. But let's go on to another example here. So now we're looking at a downtrend. Our super trend is in the red. So let's take a look at our green histogram, where right here's our first pullback, which is always the valid and most likely pullback to work out. And that's in this area, which does work out nicely. It goes in for a lower low on the price. And at the same time, we do get a lower low on our MACD and signal lines, meaning that our next cross up into the green on the histogram is still going to be valid. And that is all throughout this area. This is all valid opportunity for shorting, expecting continuation to the downside. And we do get that continuation down for a lower low here, but this time the MACD and signal lines actually make a higher low. So we get the bullish divergence this time around, meaning on this time that the histogram goes into the green right in this area, we will not be looking for a shorting opportunity, as we'll be expecting a larger pullback or potential for a trend reversal, which we do see here. Okay. Now let's move on to another example. Final examples here on this little uptrend. We have our green super trend telling us to buy and look for pullbacks. And then we have our first pullback down here with the red histogram, giving us a great buying opportunity. And this is our first cross down. So you'll be looking to buy right in this area. And this one, of course, follows through. Then we look for our next pullback here. Is this one still valid? Well, the answer is yes. We have a much higher point on the MACD and signal lines. We have another cross down into the red on the histogram, giving us our buy area in here, expecting follow through to the upside, and no bearish divergence on the MACD and signal lines yet. Now, this next time we get that bearish divergence. So this next cross down where we get the red histogram, we're going to be cautious here, expecting more of a larger pullback or somewhat of a reversal. And this does go into more of a choppy area and then a larger pullback / reversal once we see that lower high come in, that bearish divergence come in on that MACD. Okay, so with this, I do want to say that in a very strong trend, you can have multiple divergences on the MACD. So you want to think of it as not a trend reversal indication, but more of a maybe the price is ready for a larger correction or a larger pullback. You still want to have the trend as your friend, still using market structure to your advantage, looking for higher lows and higher highs in an uptrend, looking for lower highs and lower lows in a downtrend, and expecting continuation moves. But this gives you an indication of kind of the shorter term trend, and if it may be coming to, or maybe coming time for a larger pullback and maybe a trend reversal. But don't think of this as a surefire way to guarantee a reversal or guarantee a large pullback. This just gives us the majority of the time a good opportunity to save some losses on trades where we may enter if we didn't have this tool at our disposal. Okay, so that's actually going to conclude it for this video. Hopefully this was helpful, and this using the MACD in this way is actually much superior to using the RSI as a divergence indicator. Bullish and bearish divergence on the RSI is much more sensitive, so you're going to get a lot more false signals along the way. Using the MACD like this is far superior in my opinion, and much more reliable when it comes to spotting the larger pullbacks and reversals in the market. Okay, so that's it. Thank you guys for watching. Have a great night.